I think this is the main battle is being fought right now at $33. And if that breaks, then I think these next series of resistance zones will be easier to break. And so I'm on record. I think we're going to get to 40 because they're not going to hold it. They're not going to be able to hold this. And when it finally collapses, I think we're going to go to 40 by the mid. I'm going to give myself mid-April to late April.
Metals and Miners, I'm its founder and its host, Gary Bohm. Today we have a fantastic discussion lined up. We're fortunate to have with us Gary Savage, president of the Smart Money Tracker. The Smart Money Tracker provides in-depth commentary and charting analysis of the stock, precious metals, oil, and currency markets. Gary, welcome back to Metals and Miners, and thank you so much for joining us today.
Well, thanks for having me on again, Gary.
So I want to start with something that I see you discuss often on X, and that is that investors getting caught on the wrong side of the trade. So when the sentiment is hot, you suggest that they don't believe it could ever go down, and they pile in only to lose. And when sentiment is extremely low, you suggest that they don't believe it could ever go up, and they stay away and they miss out on this rise in the asset price. So would you walk us through that psychology that you're trying to help investors fight against?
So, it's just I'm going to say maybe retail investors, people that maybe haven't been in the market quite as long. They tend to, they get very bullish at tops. The longer something goes up, the more bullish they become. Whereas a professional trader that maybe has more experience, been in the market longer, the longer something goes up and the further away from the mean it stretches, the more nervous they become. So that's where you get the concept of smart money, dumb money. Generally, retail type traders are kind of like dumb money, and they get really bullish. Say after gold, most intermediate gold rallies last 2.5, sometimes 3 months. So by the time a rally has run for 3 months, your typical retail investor is wildly bullish. All they can see is blue skies ahead, and that this is the fundamentals of change. You can kind of already see this happening now. The people that were very nervous, 5-6 weeks ago, are now starting to buy into the story because gold's been going up for quite a while, 5-6 weeks. And so they're starting to buy into the so-called fundamentals have changed. The gold is being imported back from London, and so the narrative is being created, and that narrative will keep people from selling at the top. They'll be very bullish. Price will have risen for several months, and then I'll start to get some signs that maybe the smart money, which is at this point would be getting very nervous because we're just stretched too far above the mean, and they will be wanting to start locking in some profits. The retail traders won't be able to sell. All they will be, they'll just see blue skies ahead. And when I'm suggesting, maybe it's a good time to take some profits, that they'll be arguing with me that there's some fundamental reason now for why gold can't go down. And that's what I heard back in October. I was trying to get people to take some profits, and they were arguing with me that there was no way that gold was going back down, and it had gone up for 3 months, and so it was going to continue to go up. And then it's the exact opposite at the bottom. When it's, you get an intermediate correction, they usually last anywhere from 6 to 12 weeks. And that's enough time to get everybody bearish to where then all they can see is downside risk. They can't envision any scenario where, hey, the fundamentals are still the same, and at some point those fundamentals are going to take over again, and the smart money that sold at the top is now looking to buy at the bottom. And when they start buying, that puts the bottom in, and then you start an intermediate rally again. So it's tough for anybody to do, but basically you have to buy when you're scared, and you have to sell when you're really greedy.
I appreciate that explanation. So, Gary, many investors, they're constantly worried about an impending market crash, but that market crash has not come. Would you share your perspective on why they are still holding on for this crash and whether or not you believe one is imminent in the near term, say in 2025?
Well, I think the market crash story is great for selling newsletters and such, but the way the 4-year cycle is set up, I don't really see a crash. Um, we might get a market top, but it's more likely it's going to form either as a kind of a rolling top that may take a year to kind of put in that top and then really start to go down in earnest, or sometimes they'll form as kind of a megaphone expanding wedge type pattern as you'll get that first shot across the bow, and then the Fed kind of panics and they start printing money to try and cure the whatever it has broken, such as like the housing market back in 2007, and that was kind of a megaphone top there, as well as the Fed was trying to fight that. So that's one way that it could top, but because it's still fairly early in the 4-year cycle, I don't see this as a crash. Crashes typically occur. They can either occur when you get a parabolic move, which we don't have, or they can occur if the 4-year cycle runs really late into the cycle. And by that I mean, if the 4-year cycle rallies, let's say it rallies 3.5 years, that means that you've compressed the amount of time for the market to drop into that 4-year cycle. You've compressed it into 6 months. So instead of having 2 years to make that move, now it's only got 6 months or 4 months or 3 months. When you get into that kind of situation, then you could have some kind of a market crash because you need to shave off a big percentage and you need to do it really quick within the normal timing band for that to happen. But we're not in that situation. We're only about halfway through a 4-year cycle. So we're not set up for a crash right now. That's just probably, it makes good rhetoric to sell your newsletter and talk about a crash, but I don't think the odds are very good of that happening.
Yeah, and I appreciate you sharing that. A lot of people have been speculating that for quite some time, and it has not come. So, I mean, it's important that everybody has a more of a measured perspective, and you're bringing that. So, Gary, let's jump into the charts. Let's start with gold. Would you walk us through what you see that's happening in the gold chart right now, where you see it going in the short term over the next couple of months, and where is it setting up to go over the longer 12 to 18 month time frame?
All right. So this is a weekly chart. I could expand this further, but I think everybody knows what the chart looks like. We've got this huge cup and handle pattern. What we're looking at here is just the handle. The left side of the cup started back in 2011. We had that long bear market that formed kind of the cup, and then you get this whatever it was, 3-year handle. Well, we've got a breakout from that handle, and then this. Let me see if I can maybe. Not sure I may have to stop sharing here just a minute so I can play with my parameters, but let me widen this chart just a second.
All righty.
Give me 1 second here and I'll get this to where we can look at this a little easier. All right, let's get this back up on the screen now. So this is what I'm talking about. We've got, this is the cup, and then you got the handle, and then a couple of important points here on this chart. 8-year cycle lows. Here's one right here. Here's another 8-year cycle low, and here's another 8-year cycle low. So you can see that not only have gold has broken out of this handle, but we also had the 8-year cycle low towards the tail end of this handle. And now we are in the advancing phase of a new 8-year cycle. Almost without exception, especially and especially now because we are in a secular bull market, the advancing phase of the 8-year cycle is going to last at least 4 years. I suspect this is probably going to last at least 6. But we're only 2 years into this advancing phase. So I'm seeing people that are making calls for that gold has to go back down and retest 2000, and I think it's just too late for that. If it was going to happen, it would have had to happen right here during this first intermediate decline. But because gold has been suppressed so much, and I commented on this in real time when it was happening, when the banking cartel couldn't hold the suppression here at 2000, when they couldn't drive it below 2000 and keep it there, that broke the suppression in the gold market. And this is what happened. We got an 800-point short squeeze rally. And then now that rally is continuing. But it also affected the intermediate degree corrections. So because the buying pressure was so great as that manipulation and suppression of the market broke, we didn't get a normal intermediate cycle decline during this first intermediate cycle decline, ICL, just for short, an ICL. During this ICL, we didn't get a normal ICL. Instead of getting a pretty deep pullback and a bounce and then a lower low, an ABC move, this unwound as a sideways churn. And then it did the same thing here. And this unwound as a triangle consolidation. So this is purely the effect of the metals market being artificially suppressed for so many years. Once that suppression broke, the buying pressure was unleashed. And now we're not able to get normal intermediate cycle declines when it's time for one. Now, I suspect that may change when it's time for this intermediate cycle to correct. But I think we still got, probably 5 to maybe 6 more weeks, maybe even as many as 8 more weeks to go before this intermediate cycle corrects. Based on the percentage move from this top to this top and from this top to this top, I've got a target somewhere maybe around 3,200. And then at that point, you can see we're going to be stretched quite far above this 200-week moving average. The average retail investor is going to be saying to the moon, there's no way, the fundamentals will change, no way gold can go down. And then that's the setup for a deep intermediate correction. So I think we need to be prepared for that in the summer. But right now, I think we still got 5 to 8 weeks to go still before this.
Okay. And so after that deep correction comes over the summertime, what's your projection for the longer 12 to 18 month time frame?
So then we'll get another leg up. I don't think we're ready to start the parabolic phase yet, where it just, we get 100% in 8 months. So we're still in the early phase of this 8-year cycle. And I do think we're going to finish this gold bull market during this 8-year cycle. So I'm going to say somewhere between 2 and 4, maybe as much as 5 years. We'll go through the middle stages of this breakout where we will get corrective moves. And then at some point here, everybody will catch on and realize that, hey, people are getting rich buying gold and silver. I need to buy gold and silver. I want to make money. My neighbor's making money. And then that's where you get that final, big parabolic bubble type move that ends up being the top of the bull market. And then you get the crash, and then you get a 20-year bear market. So I'm going to say that's probably going to occur in earliest would be late 26, might even be as far out as late 28 or early 29. So I don't think we're in jeopardy of that happening yet.
Okay.
But we are getting stretched here a little bit. So you got to be prepared. Sometime maybe around end of March or beginning of April, we'll get an intermediate top, and we'll get a severe intermediate correction, I think.
In this particular cycle, at the end of that 8-year cycle, whether that be 2026 or 2029 or whenever that is topping out, do you have a projection price for that topper there?
I think gold's easily going to go to, well, I'm on record, 7,000 will be a piece of cake. I mean, 7,000 is only just, a little over 100% from where we're at now. And we're still very early in this 8-year cycle. So realistically, I think we'll probably go to 10,000. And when we get into that manic buying phase where, all your neighbors are buying gold and silver, they could drive it a lot further than that.
Yeah. Okay. Well, let's jump over to the gold mining chart. And Gary, walk us through what you see that's happening in the gold miners right now, where you see it in the short term over the next few months, and where you see it setting up to go for that longer 12 to 18 month time frame.
So, uh, as I said, we clearly broke the suppression in the gold market. I think we're in the process of trying to break it in silver. They could not drive silver back below 30, but they're trying to hold the suppression at 33. They're trying to prevent that breakout. I think they're going to fail, and I think when they do, we're going to get a short squeeze in silver, and it'll probably be even more aggressive than the one in that we had in gold. The miners, however, I think are probably going to be the last to break free. It's pretty easy for the banks to attack, like Newmont. We saw the huge attack on the whatever it was that maybe it was the earnings before last or something. But I mean, just ridiculous. Obviously, there's no way that's natural. And the same thing that they suppress Newmont and they suppress Barrick and maybe Royal Gold. That's another bellwether. So there's a few miners there. They can attack those, and they can kind of keep the mining stocks suppressed, and that in the hopes that maybe that kind of keeps the rest of the metals market suppressed. I mean, they've just gotten a lot of fines for suppressing gold and silver, so now they've turned to the miners. But I think the miners will break free. I think they'll make new all-time highs as well, but they're probably going to be the last to break that suppression. So I mean, you can just see how difficult they made it during this rally. These were massive percentage swings back and forth, dang near impossible to hang on to your positions when you're going through these swings back and forth. So miners are going to be tough.
So they're not even back up to their what looks to be the July of 20 highs.
So try and convince me that the fundamentals have changed so much in the last 3 or 4 months that gold is nearing 3,000, but the miners haven't even matched the highs from October. Going to have a pretty tough time convincing me that the fundamentals have changed that much. And if that's the case, then obviously somebody is suppressing the sector. So I'm not terribly bullish on the miners at this point. It's at some point when I'm convinced that the suppression is broken in the mining stocks, then I'll get really bullish on them as well. But for right now, I really like gold. I like silver because I think the suppression is about to break in silver. Miners might be another intermediate cycle before I get really bullish on them.
So will it take breaking the July of 20 highs over there in order for this thing to take off? Is that the line in the sand?
I doubt that they will really take off significantly. We're going to waste too much time during this intermediate cycle. The rule is breakouts that occur late in the cycle generally don't produce sustained moves. You can see that right here. Here's our breakout zone right there. The problem is this occurred months into this intermediate cycle, so no real follow through.
So sounds to me like you're expecting the miners to take off late in the complete gold bull market cycle, which would be somewhere between 26 and 28.
They may start to take off later like in the fall of this year, but I don't know that they're going to do it during this intermediate cycle. So we could fool around here and waste a few more weeks, and then maybe 5 weeks from now we finally break above these October lows and we get above this peak here, and maybe we get a slight breakout above that. I think that's probably going to be all you're going to get, because it's going to be late in that intermediate cycle, and then they'll hit it again and they'll drive it down hard again, and then it may be after that bottom that's where the miners really start to break free, and we start to actually get some sustained moves in the miners that might have a chance to take us back to those 2011 highs.
Okay. All right. Well, let's jump over to what's making you all excited, and that's silver. Walk us through what you're seeing, what's happening in the silver chart right now, where you see it going over the next couple of months, and then, of course, where you see it going over the the next 12 to 18 months?
All right. So this is what makes me think that the suppression in the silver market is breaking. So here's where I think they ran into trouble. They were trying to drive this back below $30. That's kind of the big psychological uh, number that they want to keep it below. And they got it below it, but they couldn't hold it. And then we get an intermediate bottom and we start to rally out of it. So then the next line in the sand that they want to protect is this one here at basically at $33. I think it's actually about 32.60 or so, but rule round it off and say 33. They want to keep silver below $33. They've got a lot of shorts build up, and if silver breaks out above this and starts to run, they're going to get caught in that short squeeze like they did in gold. And you know, who knows how many billions they lost in gold. They're going to lose it again in silver. So you can see every time we get towards that 33, there's immediate attacks to drive it back down. And then we finally get a breakout. Unfortunately, the late in the cycle rule applied, and the breakout came too late in the intermediate cycle. They hit it and they get it back down, and then they block it again, and then they block it. Get a nice move above it last week, immediately block it. Get above it yesterday, trying to block it again today. So I think this is a line in the sand. If we can get some follow through here, I think they're going to have to start covering into a short squeeze, and then I think the suppression of the silver market will collapse like it did in gold. And my long-term projections, I've been on record for this for years. $100 silver is going to be a piece of cake. Now, again, that doesn't mean it's going to be easy, but it just means it's going to get there. And I think when we get into that last year, silver could go to 250, or it could even go to 500. It's just a thin market, and when you get every Tom, Dick, and Jane buying silver, it could take 4 years for silver to get to $100, and it could take 8 weeks to go from 100 to 500.
So, okay, so here's your line in the sand, $33-ish. What's the next line in the sand that we should be looking for? Because there's going to be another battle somewhere, right?
I think this will start the short squeeze, and then I think the battles will become milder, and they will have they won't last nearly as long. They'll give up much easier. So obviously one of them's here at 35. The next one after that's at I think there's a small one at 45 and one at 47, and then of course there'll be a huge battle at 50 again. But I think this is the main battle is being fought right now at $33. And if that breaks, then I think these next series of resistance zones will be easier to break. And so I'm on record. I think we're going to get to 40, because they're not going to hold it. They're not going to be able to hold this. And when it finally collapses, I think we're going to go to 40 by the I'm going to give myself mid-April to late April. It may happen quicker than that, but I'm going to give myself at least that much time. I think we'll get to 40. I think we'll get above this. Basic rule, bull markets make higher highs. So this needs to make a higher high. And so I think we'll get to 40, and I think we might get to 45 if we start to get an aggressive short squeeze going.
And that'll be around the time when you're expecting the sharp pullback in gold. So then we would expect a sharp pullback in silver at the same time.
Correct. The intermediate, the cyclical driver is gold. So when gold is ready to top, silver usually follows it. So it's not going to deviate by more than a few days or a week from gold if gold starts its intermediate decline.
Okay. Now, what's your time projection? You say 100 is a piece of cake. It could get to 250 to 500. What's your time projection for that 100 first before it starts making the parabolic move?
So again, that one could be tough. I think we've got at least 3 to 4 more years in this bull market. It might take 3 years for silver to get to $100, and then go from 100 to 250 or 500 in the last year.
So that 3 to 4 year, grind higher in silver to 100, Does that coincide with the grind higher to 7,000 in gold?
Yeah.
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 And then
That
that last,
would be the middle stage of this breakout. The breakout that I showed from that cup and handle in gold. We're in the early stage of it, getting ready to progress into the middle stage, and then we'll have that final stage that'll occur in the last year where things really start to go straight up.
all right. So Gary, let's move over to the silver miners chart. Walk us through what you see happening with the silver miners, where you see it in the short term and where you see it going over the next 12 to 18 months.
So I don't really see much difference between silver miners and the gold miners. I think they'll pretty much, there might be a slight percentage fluctuation here and there, but I think they'll pretty much follow the gold miners. So
coming out of the summer pullback, when we get that next leg up after the summer
might
pullback,
be time where you could get some significant sustained upward momentum in the silver miners, and I don't know that you're going to get any outperformance, and if you do, it's probably only a small amount. So I don't know that you're going to do yourself any favor by in buying a thicker market SIL as opposed to just buying GDX. Easy to get in, easy out. Your spreads are going to be a penny or two in GDX, or if you're trading options, this spreads on the options will be pretty tight on GDX as opposed to SIL. So I don't know that you really need to, diversify into that. You're not going to get that much outperformance if you get any at all.
what's your perspective on performance in the silver miners once it starts making the move towards 100 and higher?
No different than the regular gold miners.
Which is at that point that you're thinking that's where the performance will be?
That's where the performance will be, but I'll say right now that if you buy GDX and hold to the end of the bull market, and you buy silver and hold to the end of the bull market, I think you'll outperform by at least a factor of 2. Now that may not be
Holding the silver.
Yeah, that doesn't mean that every intermediate cycle silver is going to outperform GDX. There'll be some where GDX does a little better. There'll be some where silver does a little better. Trying to guess which cycle is going to be which, and where you need to shuffle to one side or the other, good luck with that. But I think if you want outperformance from now until the top, I think your best bet is just to go into silver.
I appreciate you walking us through the charts like that. You can unshare the charts at this point. Everyone, I want to just welcome you to this fantastic interview. This has been an amazing discussion. Before our final set of questions for Gary, I want to direct everyone interested in the metals and mining investments to dive into our Substack at metalsandminers.substack.com. Join our community and grab a free report titled "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by Ray Dalio. Consider upgrading to our premium Substack for access to the following: The Inner Circle, which are insights from top experts like Simon Hunt on key trends; the Asset Sentiment Tracker, which is a monthly expert analysis from names like Dr. Nomi Prinz, Professor Steve Henke, and Michael Pento; the Critical Reports Library. These are deep dives into economic and geopolitical influences; and Mining Analysis Reports. These are detailed looks at individual miners. So why premium? You get key intelligence to make smarter decisions. You get access to exclusive content and insider knowledge, and you enjoy discounts on our investment resources, and there's some big ones upcoming. Even without premium, there's plenty of free content daily, so visit metalsandminers.substack.com to join and explore. Thanks for watching. Also, I'm positive you've enjoyed the conversation with Gary as much as I have. Please let him know. Hit the like and subscribe button and leave a comment below the video. So Gary, gold is clearly in this new bull market that began upon the breakout in March of 2024. The bull's been strong, but hasn't been without strong dips. Despite gold being the best performing asset since the breakout, sentiment is nowhere near typical bull market tops. Also, gold and gold asset ownership is a paltry 0.5% compared to historical averages of between 2 to 3% of assets held. So it's extremely underowned, and not many people really seem to care that it's doing so well. all of this has caused mixed emotions within investors that will only intensify as this bull rages on. So, what are your recommendations for successfully trading this gold bull?
So I think you'll do yourself the biggest favor by not trading. And by that, I mean, put a big chunk of your capital that you want to allocate towards metal, put a big chunk towards physical gold and silver. You won't overtrade that. You're not going to, you know, you're not going to get on your calculator every morning and calculate what your gold stash is worth. And, oh, do I need to sell some today? Or, it went down a little bit. Does that mean it's top? I think you'll make your biggest gains in physical gold and silver because you'll just hang on, and then at some point when you start to see bubble signs and your neighbors bragging about how much money he made on his silver coins yesterday, then it's probably time to sell him your silver coins. So that's my number one recommendation for most people is put the vast majority of your capital in physical, because the vast majority of you are not going to be able to outperform just a buy and hold strategy. And the best way to buy and hold is in physical. You won't be tempted to overtrade. Use a little bit of your capital to trade, and you can learn how to trade. And I think my subscribers have, I'll say, a decent chance of outperforming our physical, because we're gonna use a little bit of leverage at these intermediate cycle bottoms, and then we'll try and sell it at intermediate cycle tops. Doesn't mean I'm going to pick the exact bottom of every intermediate cycle. Doesn't mean I'm going to get the exact top of every intermediate cycle. But I think overall, over the next 4 years, I think let's say 20% that we use towards trading, I think we could have a decent chance of maybe outperforming, maybe modestly, maybe huge. Maybe we could outperform huge our physical stash, but I think we have a good chance of outperforming it. But for 95% of you, you're not gonna accomplish that, and you'll be better off just putting most of your money in physical gold and silver, and that'll serve you very, very well over the course of the rest of the bull market.
Yeah, I appreciate that measured approach that you bring to the table. Well, let's finish off with our discussion with what I call a lightning round. I'm going to ask you to rank a few assets as a buy or a sell by giving a score of 1 to 100, with 100 being an extreme buy and 1 being an extreme sell. And then just give one sentence as to why you take that position. And if it's an asset that you're not following, that's fine. Okay?
Okay.
All right. So right now, on a scale of 1 to 100, is gold a buy or a sell, and why?
Right now, I'd put it at a 50. We're about halfway through an intermediate cycle, so you probably don't want to buy now. You wanted to buy about 5 or 6 weeks ago. Once we get that intermediate correction, then that goes up to 100.
On a scale 1 to 100, are gold miners a buy or a sell, and why?
I'm going to say 25 on the gold miners. Again, I just don't think the manipulation and the suppression is broken. I think they have some upside here, maybe a correction first, but I don't think they have a lot of upside, and I just don't want to fight the banks and the miners right now.
Fair enough. Silver.
Same as gold. I'd say, well, maybe I'd say 75%, because I think the suppression is breaking in silver. I think it's going to break, and we might get a pretty strong short squeeze rally. So I'm going to say 75 in silver, because we're fighting right now at that 33 level.
Okay. 1 to 100 silver miners, buy or sell?
25 again, same as gold miners.
Okay. 1 to 100 copper. Is that our buy or sell?
Not something I cover.
Okay. 1 to 100 uranium, buy or sell?
Very long term, 100. Short intermediate term next year, 25. It's still in a trend.
And what's the reason?
It's still in a long-term downtrend.
Okay. And
for a year.
What about the long-term reason for 100?
I think oil will eventually go to $250, and it's going to drag uranium with it. So I think it's in a secular bull market, but I think it's in a cyclical bear market, and that bear
Okay.
market needs to end. Now, we're getting pretty deep or along in the tooth in that bear market, so it could end any day. So that's why I'm not going to give it a zero, but I'm not seeing any indication that it has actually turned yet. So I'm still a bit cautious.
Okay. Let's go to oil, 1 to 100. Is oil a buy or a sell and why?
It's probably a 10. Um, Oil it got rejected from the 200-week moving average. It couldn't get back above it. And that's a big warning sign for me when something is not able to hold above the 200-week moving average, and especially when it gets rejected from the 200-week moving average. And maybe that just means that we're going to drill baby drill and we're going to bring a lot of oil online. So at the moment, I am not at all bullish on oil, and I'm not interested in trying to pick a bottom in that right now. Once we maybe get some kind of a severe sell-off like we had in 2020 where it was just completely irrational, then I'll get really bullish. Or if we can get back above that 200-week moving average, then maybe I'll get bullish again. But long term, yes. Right now, not interested at all.
Okay. The Nasdaq, 1 to 100.
I don't see any signs that the bull market has topped yet, but we are getting stretched quite far above the mean. Still fairly early in a new intermediate cycle, so I'd say 50. I
Okay.
think you got potential, but it's not like you've got 20% potential like you might have in silver.
Okay. And 1 to 100 is the S&P 500, a buy or sell and why?
Same as the Nasdaq.
Okay.
Same exact position.
All right. And lastly, on a scale of 1 to 10, with each number representing a percentage, like 1%, 2%, where do you see inflation ending the year?
I'm not sure. I'm not sure inflation is going to increase all that much because I think oil is kind of stuck. Oil is a big part of inflation, but I don't see it really coming down. You know, the claim was that Trump would get in and would immediately reduce inflation. Is nonsense. Um, Inflation has been kind of stagnant, and I think it's going to continue to be stagnant, but I don't think it's going to come back down. So you're not going to see prices drop. That's just human nature. If you can, if the price went up, let's say the price of your widget went up to from $7 to $10 because of inflation, you're not going to voluntarily lower your price to back down to $7 if you can get $10 for it. And if everybody's become accustomed to paying $10 for it, you're just not going to lower your price. So I don't see, prices coming back down unless we have a recession. Now, when you get a recession, demand collapses. In order to sell anything, you got to bring your prices back down. So that's the only way we get inflation to come down is to cause a recession, which of course nobody wants that. So, and I don't see the catalyst for it. You have to have a catalyst for a recession. They don't just magically appear out of nowhere. Most of the time, the catalyst is a 100% or greater spike in the price of oil in a year or less. That's such a shock to the middle class and the lower class and the economy in the whole that everybody uh, freaks out. They clamp down on spending, and and then it's kind of a feedback loop. Nobody's buying Starbucks coffee anymore, so they're not making as much money. So they start laying off people. Then they can't buy, clothes from Old Navy or whatever, and that there's the spiral down into a recession. But I don't see that catalyst right now. Without a catalyst, you don't get a recession.
All right. So we're sitting around 3% inflation, low threes. So do you think 3 to 4% is probably the range for 2025 based on everything you just said?
Probably, yeah.
Okay. Gary, thank you for coming on to Metals and Miners, for being so generous with your time, analysis, and ideas. It's been awesome to spend the time with you as always. Would you summarize your views real quick and then let everyone know more about your work, how they could find you and connect with you?
So at this point, I'm mostly just going to focus on metals. And that doesn't mean I won't do some analysis on the stock market and energy and Bitcoin. Um, in my premium newsletter, I will, but I'm mostly going to be focused on gold and silver and the metals, simply because this is the best setup you could ask for. Got a breakout. It's from a 13-year cup and handle basing pattern. We're still early in the 8-year cycle. I think this 8-year cycle is going to take us to that top. So now I am going to be shutting down the SMT to new subscribers here pretty soon, possibly at the end of February. I might stretch it out to the end of March, but at that point, I'm going to shut the SMT down, and then at that point, it'll just be loyal SMT subscribers from there to the end of the gold bull market. At which point, I'm going to take a well-deserved retirement.
Okay, and tell us where we could find your work and how we can connect with you.
So I suppose the easiest way would just be to Google Smart Money Tracker. That'll get you to either the blog or the premium website. The premium website is smartmoneytrackerpremium.com, or you can find me. I post on Twitter, although I'm posting less and less as I'm getting ready to close the SMT, but it's Gary Savage 1 on, I guess it's on X now. You can find me there, and I post some stuff on there, but as I said, it's getting less and less as I'm getting ready to shut down the SMT to new subscribers here pretty soon.
Okay, well, I will put all that information up on the screen, everybody, so you can go find Gary. You can click through, explore, check out what he's offering. I've been following you for a number of years, Gary, and I've had you on the show before, and I really appreciate what you bring to the community, and I think it's really critically important. I appreciate what your candid nature on X. It's all very important. So, guys, go follow him, go check him out. Gary, thank you for being here. I look forward to having you back on sometime soon. And everybody else, thanks for watching.
Thanks for having me.
Just welcome you to this fantastic interview. This has been an amazing discussion. Before our final set of questions for Gary, I want to direct everyone interested in the metals and mining investments to dive into our Substack at metalsandminers.substack.com. Join our community and grab a free report titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by Ray Dalio. Consider upgrading to our premium Substack for access to the following: The Inner Circle, which are insights from top experts like Simon Hunt on key trends; the Asset Sentiment Tracker, which is a monthly expert analysis from names like Dr. Nomi Prinz, Professor Steve Henke, and Michael Pento; the Critical Reports Library. These are deep dives into economic and geopolitical influences; and Mining Analysis Reports. These are detailed looks at individual miners. So why premium? You get key intelligence to make smarter decisions. You get access to exclusive content and insider knowledge, and you enjoy discounts on our investment resources, and there's some big ones upcoming. Even without premium, there's plenty of free content daily, so visit metalsandminers.substack.com to join and explore. Thanks for watching.